All right, let's dive in. Today, we're going to crack the code on the visual language of the market. We'll break down the three most common trading charts you'll ever see, the line, the bar, and the candlestick, and help you figure out which one tells the story that you need to see. You know, when you first look at the financial markets, it can seem like pure chaos, right? Just this constant, overwhelming stream of numbers and data. But here's the thing. Hidden inside all that noise, there's a story. And charts, well, they're how we learn to read it. I mean, we've all been there. You're staring at the screen, prices are flickering up and down, and it feels pretty much impossible to get a real handle on what's actually happening. It's kind of like trying to read a book by just looking at a jumbled list of random words. So the key is to find the right chart. You've got to understand that not all charts are created equal. Each one is a different kind of storyteller. One might just give you the simple top-line headline. Another one's going to give you the dramatic moment-by-moment action. Choosing the right one, that depends entirely on the story you need to hear. Okay, so let's start with the most basic storyteller of them all, the simple line chart. Think of this one as the high-level summary, you know? It's perfect for getting the main idea without getting totally bogged down in the details. The real power of the line chart is just how simple it is. All it does is connect the dots. Specifically, it takes the closing price from one period and draws a line to the next one, whether that's a day, a week, or a month. This gives you a single, clean line that's incredibly easy to follow at a glance. And that simplicity, well, it's both its greatest strength and its biggest weakness. It's fantastic for spotting long-term trends because it just filters out all the noise of the daily price swings. But, and this is a big but for a short-term trader, that lack of detail is a huge problem. It completely ignores the opening price, the highest price of the day, and the lowest. And those are absolutely crucial data points if you're trying to make quick decisions. So what if you need more of the story? What if those missing details are exactly what you're looking for? Well, that brings us to our next chart, the bar chart, which starts to add some really important new characters to our plot. The bar chart gives us 4 key pieces of data for every single period. You'll hear traders call this OHLC. It's just a quick way to say open, high, low, and close. These are the vital details the line chart leaves out, and the bar chart is designed to show them all at once. And here's how it pulls that off. Each vertical line you see represents the full trading range for the period. The very top is the high, the very bottom is the low. Then you've got these 2 little horizontal ticks. The little tick on the left side is the opening price, and the tick on the right is the closing price. It's all right there in one simple bar. So, the bar chart really gives you the complete price picture. It's a fantastic middle ground, way more detailed than a line chart, but it avoids some of the complexity of candlestick patterns. The downside? It's not always super intuitive. It can take a second to figure out if the price went up or down. And in really volatile markets, a screen full of these can start to look pretty cluttered. All right, now let's get to the most popular chart type out there, especially with modern traders, the candlestick chart. It takes all that great OHLC data from the bar chart and gives it a huge visual upgrade. It literally shows you the story in full color. This shows the difference perfectly. See those thin lines? Traders call them wicks, and they still show the high and low, just like a bar chart. But the real magic is in that thick part, the body. The body shows the range between the open and the close price, and here's the game changer. It's color-coded. Typically, green means the price closed higher than it opened, and red means it closed lower. You can see the market's momentum instantly. So that visual clarity is the candlestick's real superpower. It makes spotting all sorts of predictive patterns so much easier. But with that great power comes a little bit of a challenge. For a beginner, learning all those patterns with names like doji or hammer can feel like learning a whole new language. And yeah, just like bar charts, they can get visually noisy when the market is really moving fast. Okay, so we've met our 3 storytellers, the simple line, the detailed bar, and the visual candlestick. Now for the most important part, figuring out which one of these you should actually be listening to. So the big question, which chart should you use? Well, the answer, as you've probably guessed by now, isn't some one-size-fits-all thing. It really, truly depends on you. Let's just break it all down. If your goal is long-term trend analysis, you're a long-term investor, the line chart is perfect. It's simple, and it cuts right through the noise. Now, if you're a bit more active, maybe an intraday or medium-term trader who needs that full OHLC data, the bar chart offers a really great balance. But if you're a short-term trader and you're really focused on market sentiment and pattern recognition,
The candlestick chart is just invaluable because of that instant visual feedback.
So, as we wrap things up here, let's focus on the single most important takeaway from all of this.
There is no single best chart, period. The right tool is the one that fits the job you're trying to do. Think about it. Are you investing for retirement and just need the big picture? The line chart is your friend. Are you trying to scalp profits in just a few minutes and need to see every little flicker of market sentiment? You're going to want the candlestick. Your goals, your timeline, and the level of detail you need will always point you to the right choice.
At the end of the day, the goal isn't to master every single chart out there. It's about finding the one that helps you see the market story most clearly. So the final question really is for you. Now that you have the tools and you understand the language of these different charts, what story are you going to go find?